Hi, and welcome to the webinar today, Picking Low-Hanging Fruit. This is the second event of Month of Marketing 2017 and one that I've been really looking forward to. So before I introduce Danelle, just a little bit of housekeeping. So if you have any audio or visual issues, please use the chat window on the admin panel, and we'll get back to you and see what we can do to get those sorted. In terms of questions, if you have any questions for Danelle, she is going to stay around at the end of the webinar to answer those. Possibly I'll ask some during the course of the webinar, but more than likely we'll just do those at the end. But feel free at any time to ask questions using the questions panel. Also, we are recording this webinar, and we'll send you the recording after it finishes, so either later today or tomorrow. And if you look in the handouts window on the admin panel, you'll see the slides for today's webinar and also a checklist, which will help you implement some of the stuff that Danelle is going to talk about. So you can download those from the admin panel. Again, we'll send those out in the email with the recording either later today or tomorrow. So, look, when we talk about marketing, the conversation is often focused on new clients. But sometimes I think it's good to question: is that how really we should be growing? New clients all the time. Is it better to have 100 clients paying, say, $2,000 per year, or 50 paying $4,000? In other words, can growth also come from within? Because added to that, obviously the cost of acquiring new clients is very high versus no acquisition cost for a customer that you already have. And that's obviously a marketing truism that every business, it's easier and cheaper to sell more to your existing clients. So whether we want new clients or not, it's really important to make sure we're not leaving money on the table by not selling more to our existing clients. And really that's the foundation of an efficient and profitable practice. So in this workshop, that Danelle's going to have Spotlight Reporting is going to show you how to unlock the hidden value in your client database. So just before I hand over, Danelle's been battling flu for the last week, and I think in normal circumstances she wouldn't be in the office. But thankfully she's soldiering on and is going to present this session. In case she goes quiet for a few seconds, she might just have muted herself to go for a quick drink of water and a quick cough. But this is going to be a great session, whatever. So I'm delighted to hand over to you, Danelle, and get things kicked off.
Excellent. Thanks, Matt, and thank you, everyone, for joining. Just before you do mute yourself, Matt, my screen's still coming through there okay for you?
It is perfect, yes, that's great.
Okay, excellent. I'll just move that across. And thank you very much for having us along. I'm very delighted to be part of the month of marketing and be presenting this webinar in association with Bizink. So as I say, apologies if I have a slight Barry White husky voice going on. I have come down with a bit of the flu over the weekend, so you just have to bear with me. Hopefully the coughing will abate for the next 40 or so minutes as we work our way through this. So as Matt said, this session is going to focus on low-hanging fruit and really farming that existing client base. My name is Danelle Whaanga. I'm the Customer Success Manager here at Spotlight Reporting. I was an accountant in a CA firm here in Wellington for 10 years as well, before I moved across to Spotlight. I initially focused on working with our New Zealand-based partners before taking up my current role as our Customer Success Manager. And now I'm fortunate enough to work alongside our top partners globally as we really look to work alongside our partners and drive a partnership with them and really engaging them and allowing them to move into the advisory space. We have just under 300 super VCFOs globally, ranging from the big end of town with the big four accounting firms selecting Spotlight Reporting as their business intelligence tool of choice, right down to smaller firms that are setting out on their advisory journey as well. So again, thanks Matt for having us along. Delighted to be presenting as part of the month of marketing in association with Bizink. This is not about product today. We are going to be talking about low-hanging fruit and how to work with your existing clients. But just for those of you who may not have heard or seen of Spotlight reporting before, we basically have a suite of 4 products in our service offering. A reporting tool to allow you to prepare management and board level reports, including financial and non-financial information. We have one-page dashboards for KPI reporting and engaging interest. We have a budgeting and 3-way forecasting tool to allow you to prepare full, complete cash flow forecasts. And we have our Spotlight multi-product as well to allow you to prepare multi-entity consolidations and include ranking and benchmarking reports as well. Spotlight reporting is a cloud-based tool, and we have direct integrations with MYOB Accounts Right Live, Xero, QuickBooks Online, Workflow Max, and Google Analytics for non-financial integrations. But we're very much a tool built by accountants for accountants. So you'll see the note there, the Excel icon. You are also able to upload Excel into a Spotlight report. As I mentioned previously, we have been adopted by the large accounting firms as their business intelligence tool of choice, and we've also received further validation of our position as being market leaders in this space by winning the Xero App Partner of the Year in 2016 and 2015 as well. So 2 years running now, delighted to have that recognition from those within our industry. Obviously XeroCon South coming up next week, so watch this space and we can let you know sooner rather than later if we can manage to take it for a 3rd year in a row. But very exciting stuff, and nice to have that endorsement that that we're on the right track and what we're looking to achieve, transforming our industry. Richard Francis is the founder of Spotlight Reporting, and he himself was an accountant in practice. So initially at larger consultancy services for big firms, before he built out his own boutique practice as well, where they very much focused on value-add advisory services rather than purely compliance-based engagements. So right from the top of our organisation, right the way through, we have a lot of accounting DNA on the team. As I say, we're very much a tool built by accountants for accountants, and very much people who have been in the trenches as you are yourselves at the moment. So picking low-hanging fruit, how can we actually look to your existing client base to ensure that you're getting the most value out of your existing clients? What we're going to go through in today's session is about setting very clear strategic goals, what they could look like and how you can do that. Inspiring and engaging your team and yourself to come on board. It's so critical that you manage to bring your team on the journey with you and your clients as well. Identify the right clients and the right sorts of advisory services that you wish to offer so that you can align the two and make sure that your messaging to them is right. We'll talk through how a service opportunity matrix can assist you in this. And execute, basically. We know that there has been a lot of media hype around a need to move away from compliance, to move into advisory, and we've heard lots of people, the likes of Xero, etc., champion the transformation story for some time now, and what we're really seeing is that there is a fundamental buy-in from the industry, but those that are doing it really well are those that are making the small, continuous improvements. It's the 1% changes over a period of time that really start to add up, as opposed to trying to make great big wholesale sweeping changes to your practice and your firm. Those firms that are really succeeding in this space are those that are embracing change continually, understanding that they may not get it 100% right the first time, it may not be 100% perfect, but they actually start to get out of the gates and deliver on some of these goals that they are setting for themselves. The real key here is to set very clear goals, articulate those well, bring your team along with you, and continue to deliver. Look, I myself, as I mentioned, have been in an advisory firm and spent 10 years in an accounting practice. I don't believe that there is the death of compliance. Compliance is always going to have its place. The 2016 Good, the Bad and the Ugly report out of Australia, I think just has a really nice chart showing, if you like, the fee levels that we're earning out of our compliance revenue. And I don't think anyone would really argue too much that we are being squeezed with our margins as technologies improve and processes improve also. So it's about how we actually make sure we're farming our existing client base to make sure that they're still receiving value and what it is that we're delivering for them, because we can see that with automation and with technology, the value in compliance is eroding, and it is eroding reasonably rapidly. Again, the same 2016 Good, the Bad and the Ugly survey, 84% believe compliance is not going away. And nor do I. There is going to be a place involved for compliance. There always will be. However, 84%, so that same number surveyed, said that for their firm to survive, they need to be providing advisory services. So we need to be farming that low-hanging fruit and making sure we're actually looking after those existing relationships that we have and making the most out of them. So the time to ban excuses is now and starts tomorrow. We have, as I've said, we don't believe compliance is going anywhere, but our margins year on year are being squeezed. Technology, automation, processes are meaning that the margin that we're receiving in that work is eroding, and we really need to actually stop resting on our laurels and actually go out there and start to deliver for these clients exactly what it is that we want to. Start building the relationships as trusted advisors that we want to gain from them. Tax agencies the world over have really driven and marketed an accountant's practice up until about the last, say, 10 years, certainly the last 5 anyway. We know this is changing, and there's been plenty of education on that, but so few in our industry are actually doing this and doing it well. So we often hear all sorts of excuses. I'm too busy, it's too soon, it's a bit hard, my team don't get this, it's tax season, my clients don't get this, or my clients won't pay for this is another great one. What? I have to spend money? Compliance is our priority for now. We all have these issues. We all have competing resources for our time and for our clients as well. What we actually need to do, and obviously hopefully by committing and attending this webinar today, becoming a trusted advisor to your existing clients is absolutely a priority for you, which is why you've joined the webinar that we have today. Banning excuses and not letting any of these reasons which come up week after week, year after year. It's always, we know our tax states, we know when our compliance season is. We could easily fill a day doing compliance-based work or lower level work, but that's not going to allow us to set ourselves up to pick that low-hanging fruit or change our relationships with our clients. We surveyed our Spotlight partners recently, and half of our subscribers in 1 year experience a 10 to 50% advisory fee growth. If growing your revenue by 50% in the next 12 months is mission critical to your firm, have you set time aside tomorrow, this week, this month to ensure that it can happen? So what do we need to do first? We need to set goals. What is it that we are looking to achieve? Are we looking to grow our average revenue per client by X percentage or by a dollar amount? Are we looking to attract new revenue from our preferred types of clients? Do they have a set persona? And if so, what is that? We want to do interesting work of value and purpose. Be really specific as to what it is that you're looking to do. Save time. How many hours per week do you want to save on doing compliance, on your usual day-to-day? Having happy, engaged clients. And how do you measure this? Have you ever asked your clients how happy they are with your services, what they would like from their accountant? And do you measure this and monitor this on an ongoing basis? Grow value. Growing value for you, for your team, and for your customers. So we all know what SMART goals look like, that are very specific, that are measurable, that they have timeframes assigned to them, responsibilities. What about our key objectives and our key results? Do you have that actually written down anywhere? And have you articulated that to your team? The number of firms that we speak to and that I speak to that are absolutely passionate about becoming a trusted advisor for their clients, yet they don't actually have that defined. What does that mean in terms of revenue growth? What does that mean in terms of client growth? How are they going to actually resource that? There's no action plan set in place, no key staff given responsibility to really champion and drive that forward, so that they're actually setting themselves up to fail from the outset. Or they're not resourcing and providing sufficient resource and time and effort into ensuring it does happen. For example, if we've got some key objectives, gain more value from our current clients and bring on an extra X amount in gross profit, 100,000, 500,000, what is it that is right for your firm? We need to break that down. If we can increase our average revenue per client by 20%, might be a key result. And underneath that, we have a series of tasks which will ensure that we can achieve that. And we have owners responsible for that. We might give them a weighting. So Anna may be responsible for preparing an advisory service campaign so that 60% of our clients purchase at least one of our services. And Sean might be responsible for making sure that we implement fixed fees for our tax lodgements. If we want to increase our MRR, or our monthly recurring revenue by service, by 30%, what are the tasks that we need to break down in order for that to happen? We may need to build one new core service for each type to increase our revenue by 10,000, and Phil is going to take ownership of that. Increase the value of our advisory services to increase by 10%, and again Anna is going to own that. What is it that is your key objective, and how does that, what key results will drive you achieving that objective, and how have you resourced that? Assigning ownership. What is so important is getting clarity on what your objectives are, articulating that to your team and bringing them on the journey with you. By wanting to farm your low-hanging fruit, by wanting to pick this low-hanging fruit, it doesn't mean that you're going to get more hours in your day. So how are you going to set it up so that you can actually achieve this? And it is so important that you bring your team along for the ride with you. Whether perhaps you may keep the ownership and the tasks perhaps in your own court, it is really important that your team are clear as to what you're wanting to do and how you can drive that. If you're only as good as your weakest link, you need to make sure your weakest link knows what the minimum viable acceptable position is for your firm. If they don't know that, if they're kept in the dark, then you're only going to ever be as strong as that weakest link, or as strong as whatever time that you can and resource you can commit to this project. 70% of clients of existing Spotlight users target their existing clients. As Matt said, it is a lot easier and cheaper to target your existing client base than it is to try and bring on those new revenue streams. So what do people do with their existing clients, rather than the over and above the standard typical year-end engagement, for example? When people are onboarding new clients, they will often use an onboarding checklist. Does the client have growth potential? Are they likely to have scope to move there in the future? Are they going to be fee adverse? Are they going to be in an industry that we want to work with? What about if you were to run these checklists and these client acceptance forms over your existing clients? How many would actually pass the test? And I set that challenge for you to be really honest with yourself and with your clients. What sorts of clients are you targeting? Again, make sure you're very, very clear on the types of clients that you want to work with. Make sure that you've articulated that to your team, to those that you work with, your industry peers, your banking colleagues, for example, so that they also are aware of the sorts of people and the sorts of firms that you're interested in working with. When you're looking to onboard new clients, you no doubt put them through, or I would hope that you put them through a really robust onboarding process. I challenge you to run that checklist over your existing client base and see who would make it as an existing client in your firm today. Is it that they simply need to have a heartbeat and a checkbook? And so often when you are looking to grow a firm, or perhaps when you're just starting out, any fee-paying client is a good client. But are we at the position now where actually we want to work with clients that are open-minded, that want to work with us in a particular type of a relationship? We don't want those people that simply just want year-end compliance. Perhaps we could be introducing them to somebody better positioned to provide those services for them. You know, and make alliances. If there are other accountants out there that you know that are wanting only that work, perhaps you form an alliance with them and say, hey, look, we've got some clients that we'd like to free up their future. They're not interested in more of the advisory work that we'd like to build out. How about you take care of them from the compliance side? A real win-win situation. The age-old issue of selling, and so often when it comes to selling, accountants tend to clam up. They feel it's perhaps not natural, not one of their strengths, and not something that we've necessarily had to do a lot of traditionally, as we have been heavily regulated by our tax agencies. But how can we actually sell to our clients? How can we educate our clients? Business is people, business is personal. Learning to sell and coach our teams is nothing more than two humans connecting on value. So for our existing clients, we typically have extremely strong relationships with them, often going over a number of years. So how can we connect with those existing clients and educate them on the value that we can provide for them? That's selling. And if they don't want to listen, if they're not prepared to work with us in the capacity that we would like to work with them, is it time to say goodbye? And as I say, have your alliances in place and have those connections, and be prepared to have those conversations, because we know that capacity issues, time and resourcing, is becoming the number one issue delaying firms from doing more in this space. If you need to free up some of your time from some clients that are not allowing you to operate in the capacity that you want to, then you need to be really strong and committed to freeing up their future. One client recently told me how they decided to maintain the same headcount. They very much 5 years ago decided that they wanted to move more into advisory, but they did not want to grow their headcount by huge numbers. So they had two options. They could either get rid of some of the compliance work, but they actually had a few other options. They could get rid of the compliance work, adopt technology and become really efficient with what it is that they were doing, and also freeing up some of their clients that refused to work with them under the terms that they now wanted to work with. They also adopt some lean principles as well and really rationalise their processes to make sure that they could have the time to spend servicing their existing clients. Business is personal. Business goals, personal goals and financial goals need to be all on topic. So how do we actually start to engage the right conversations with our existing clients? Once we've understood what our key objectives are, we've articulated these to our team, how do we actually, and we understand what our ideal clients are that we want to start working with first, how do we engage those conversations? What do we know about them? Do we know what their business goals are, their personal goals, and their financial goals are? Because we have to actually have all the pieces of the puzzle together so that we can become a true trusted advisor and solve their solution, solve their issues. Engaging them in the right discussions. As I said, no, there are no boundaries. Business, personal, and financial are all on topic. Using financial information as your platform. We all know that year-end accounts are a snapshot of history. But how can we actually use our financial information to engage them in forward-looking discussions? Can we present them a one-page dashboard, perhaps with budget data, so that we can then start to talk about what's going to happen in the year ahead, the month ahead, the quarter ahead? And we can then start to drill down into what is actually driving those numbers. And then we can start to focus on what are the non-financial impacts. What are the non-financial drivers? And all of a sudden, we can take a historic, backward-looking set of information and use that to drive forward-looking discussions and really position ourselves to become a trusted advisor for our clients. We can only manage what we measure. Do we have good information available? Do we have the data available that the client can actually make decisions based on? How can they afford not to know the impacts of their decisions before they make them? How can they afford not to engage with us on a more regular basis about the impacts of their decisions? When I was in a firm, we were quite innovative, if you like, and we started out about 7 or 8 years ago presenting clients with proposals. And there would be inevitably 3 options that the client could pick from, and obviously we would be targeting them to take option 2 or plan B, the silver option. We would ask our clients, what are you wanting from your accountant? And 9 times out of 10, we got our accounts, our taxes looked after. Because people don't know or didn't know what we could provide for them. My insurance advisor, if she asks me, what do you want from your insurance advisor? I'm going to tell her I want insurance. Unless I know what more she can offer me, what more can I possibly tell her? It's our role to educate our clients as to what they can have. What are you looking to achieve? How powerful is that to be asking a client? Tell me what you're looking to achieve in your business goals, your personal goals, and your financial goals. And then we can actually start to make sure that we can provide you with suitable information that addresses those business, personal, and financial goals for you. If I ask you what you're looking from an accountant, and you have no idea what an accountant can provide me, I'm not going to get anything insightful out of that. If someone asks me what I'm looking to achieve, it changes the conversation quite radically. If I then follow up with, and what is the value of you achieving that? That is hugely powerful. As a business owner, as an accountant, when we're talking to these clients, as business owners, They inevitably invest 60, 70, 80 hours of a working week in their business, often sacrificing family time, their own personal time. They'll often have thousands of dollars tied up in their current accounts and their businesses that they can't pull out. What is the value to you, Mr. Client, of being able to work less? What is the value to you of being able to actually get some of that money out? What is the value to you to be able to have sleep at night, knowing that we have discussed these issues in your business, knowing that we're front-footing these issues in your business, knowing that you have a business partner, a trusted advisor to bounce ideas off? What is the value to you, Mr. Client, in helping and me assisting you with achieving what it is you're looking to achieve? And all of a sudden, we change from a price-based discussion to them seeing the value. Who wouldn't? What business owner wouldn't want to then invest with you? It takes away price as an argument, and all of a sudden you'll see that you can actually gauge some really nice higher margin fees on that basis. Using a service opportunity matrix, looking at the revenue and the value that is so often right under your nose. So how can we actually, once we've got our clear objectives, once we understand what our target clients look like and who they are, what sorts of services do they actually want and or need? And pulling together something as simple as a service opportunity matrix, where you can see we've got a software startup company that they are starting up, so that they're a startup, they're strapped for cash. We're just going to give them a one-page dashboard will be enough for now. We know they're going to need a budget, and we know that they're going to need a little bit of mentoring and strategy as they get out of the gates. As opposed to our family-owned business, that's slightly more established. So they do have an annual budget, and we're also going to prepare a cash flow forecast for them. We're also going to do some monthly reporting or quarterly reporting with them, and we'll do some mentoring and some strategy work as well. What would a service opportunity matrix for your firm look like? And assign the value of the packages next to them. So again, you become really clear where that low-hanging fruit is, where the greatest opportunities are for you to get out there at the moment and start to engage in those discussions. You very much have a ripple effect too. And by farming that low-hanging fruit, it's very much a journey, as I said in the beginning. So you need to take your clients on this journey as well. You might start off with a virtual CFO type of engagement, or a monthly reporting, or an annual budget and cash flow pack. And we can then build that into regular reporting and cadence of meetings with the client. They then start to see you as a mentor, and they'll ask you to become involved, and you become involved in additional projects, perhaps around systems. It might be around strategic planning. It might be around key hires. It might be around their structures. And then you can move into putting together advisory boards, becoming a trusted advisor for them, taking them out for a couple of days out of the office on an annual basis for a strategic retreat, and really embedding yourself as a key part of their decision-making armoury. Now, you won't necessarily go to board level for all of your clients, but believe me, in amongst your current client base, there will be those that will definitely need more services from you. What sorts of package of services are you offering them? So what are some of the sorts of things that our Spotlight clients are doing at the moment? Offering a board experience with Spotlight reporting. So build the pack and include all relevant data, financial and non-financial, and make it forward-looking, make it relevant. Only 50% of Spotlights are currently promoting forecasting as a service. How many of us would be doing, could confidently say that at least 50% of our clients have a budget as a minimum loaded into their financial reporting software? How many have budgets loaded into Xero, into MYOB, into QuickBooks Online? And then how many have a cash flow forecast? Cash is king in the lifebloods of businesses, and yet so often we wait for a client to need a cash flow forecast for financing purposes for a bank. Isn't that our first failing as an accountant? We've got a client in Australia, and for any client that crosses his desk who doesn't have a budget loaded into their financial reporting tool, he prepares 2 cash flow scenarios for them, a good and a bad. He books a meeting with them, and he takes one of his team members along to that meeting. He sits down and he talks through the implications of those cash flow scenarios with his clients. He uses charts to make sure that they completely understand the trends that are happening in their businesses and what the drivers of those are. As they're discussing, as the client is discussing what he perceives to be true and going to happen and his goals, that team member updates the cash flow. So that come the end of that meeting with that client, not only do they have an accurate cash flow forecast, they have an extremely compelling reason to want to meet with that accountant again. And it's not going to be at next year end, I assure you that. So he uses scenarios and cash flow forecasting as a way to really engage their clients into what's going on with their business. You can do a dashboard promotion alongside your GST, VAT, or your annual reports. Make it really simple and easy to ensure that you have conversation starters with your clients, because that's what we're wanting to get the client talking about their business, personal, and financial goals. Engaging a dashboard and 6 really visual charts will allow you to do that. Look for consolidation opportunities and perhaps do some tax planning or minimisation with your clients. So looking at, if you like, a value add curve, initially you need to understand the why. Set your objectives. What are your objectives and what are you looking to achieve from doing this? What are the key results and how can we break that down into individual tasks? Have we got the model in place? Who are our team members on board? What processes and tool sets do we have that we're going to use to do this? Are we cloud-based? Are we going to use a business intelligence tool like Spotlight, for example? Is it a forecast? Is it a management report? Is it a one-page dashboard? What clients are we targeting and why? You can see by using a service opportunity matrix, we can quickly understand the sorts of clients that are going to need the types of services we're looking to offer. And we can make sure that our messaging is appropriate, that our avenues that we're going to engage these clients are appropriate. We iterate and we grow, so we can continue to refine and review and learn, tweak our services, tweak our teams if we need to, and grow. And by continuing to do that, and by continuing to bring our clients on the journey, you'll ensure that you're able to get some really nice margin and pick that low-hanging fruit, moving away purely from just compliance. What are 5 perfect Grow Perfect learnings that we have seen from clients? Select well, be upfront with your clients in the process and in their resignation process as well. As I say, run your onboarding checklist over your existing clients. How many would make it through? And don't be shy, or be prepared to actually free some up. Don't have boundaries. Business, financial, and personal are all on topic, and you need to understand all 3 and how they relate for each and every stakeholder and that entity for you to be able to really make sure that you're on point with your advice for them. Whether it's 2 shareholders, a husband and wife team, a couple of people in their senior management team that might be driving decisions as well. Make sure you understand where everybody sits with regards to those. Compelling services, compellingly marketed and compellingly sold. So a number of accounting websites still that say we're specialist in, and there's a list of about 25 to 30 things that we can specialise in. What is it that we're really looking to do? Have a look at your service offerings. What is a service opportunity matrix? What's right for your current clients? Are they in startup mode? Are they more established and they're actually in sale mode? Are they, and they need to be refined? They need to go cloud. They need to adopt technology. Where is it that your clients are at the moment, and what services do they need? Shock and awe. Do more. Be available and deliver delight. Meet with your clients regularly. Go above and beyond the historic financials and the tax planning. Ask them about the business, the personal and the financial, and then you can provide them really deep dive insights into those areas. As accountants, we are in the best position, and too rarely do we actually make the most of those relationships that we have, of the information that we have. Any other industry would love to be in the position that we have, from the banks to the insurance to the financial advisors. Let's make sure we're actually using that to our best advantage. Price with confidence. As price only matters where value is weak, ask them, what is the value of them achieving those objectives? And quite quickly, you can see how you can take a 2.5, 3.5, 4, 5K fee and to start to building out a more robust assignment. Is then getting back time in their life, time with their families, money out of their business worth $5, $6, $7, $8, $10, $20, $30,000 to them. I just about got there to the end before I can, before I have a coughing fit. So that virtually wraps up from me. Where are you with your advisory services? Finally, go forth and pick that low-hanging fruit. So I think we'll stop there. Matt, have you got any questions coming through?
Yeah, I'll jump in. I'll let you go and mute yourself and have a bit of a cough. So thanks for soldiering on there, Danelle. That was fantastic, and I appreciate you doing that when you're not feeling well. I was going to ask you what's the best place for people to find out about Spotlight reporting. Now, if you if you're not quite ready to answer that, that's fine. We can do that in a second. What I was just going to quickly talk about before we get into the Q&A, and I can see some questions coming in already. If you have any questions, please use the question panel to let me know, and I will ask Danelle those questions for you. She's going to stick around. Just before we do that, I wanted to let you know that the next month of marketing session is going to be this week. If you're in the US and Canada, that's the 6th, Wednesday, Pacific time 4 p.m., Eastern time 7 p.m. New Zealand and Australia, it's Thursday the 7th, and that's AEST 9 a.m. and NZ time 11 a.m. So it's the first part of a stream called Prospect to Proposal, which actually fits in really well with what Danelle's been talking about today, and that's presented by Revolutionary Firm. And there are 4 sessions in that stream, the first of which is about packaging your services, which kind of really fits into this, but the stream is basically going to go package your services, then how to price them to be profitable, how to communicate your value in sales meetings, again some of the same topics Danelle's been talking about, and finally how to send out perfect proposals. So a lot of P's in there. The stream's presented by Mel Power and Steve Major of Revolutionary Firm, and amongst other things, they've both run very successful practices. So Mel, a bookkeeping practice, and Steve, accounting. So what they're going to talk to you about is not based on theory. It's same as Danelle. It's practical information that's helped them win a lot of profitable clients. So you're already registered for that session. We'll send out more information a day before and hope to see you there. But we've got some questions coming in now. Are you okay to take those, Danelle?
Yeah, absolutely. Apologies, I got just virtually to the end. Just
No,
on that,
that's all good.
if you are looking to find out more about Spotlight Reporting, I haven't got our URL up there, but spotlightreporting.com, our website has plenty of information around the tools. You can have a trial, and our pricing is on there as well.
Cool. We'll send out a link to that in the email afterwards, so you will be able to find out about that then. Okay, some questions. So the first one I've got here is from Abigail, and she asks, so how will advisory play out during tax season? She's saying, in her firm it turns more into a tax stand from January to April. I guess what she's asking is, how do you fit it in around those really busy times?
Yeah, look, and I do understand, look, I was in practice myself, I understand, particularly in March, if it doesn't have a tax return attached to it. Here in New Zealand, for example, often people won't want to even have a look at it. And it's about planning as far in advance as you can, Abigail. And, it's about, as I said, the small changes. So rather than transforming your whole firm and your whole client base, go through the exercise with a service opportunity matrix and identify who are the top, what are the top 20 clients, and pick those off in a manner that's actually going to be appropriate for you. So whether that's, you want to target one a month across, 3 or 4 of you, it might be that you want to target one a week across, 5 or 6 of you, and so you'll get the numbers up. When you do go into tax time, it's also about making sure that you still seize the opportunities. So yes, you may not have time to, for example, do a full cash flow and scenario-based option to give to a client, but is there someone in your team who's really well versed in dashboards and, within 10 or 15 minutes can produce a reasonably robust dashboard that can actually still talk to your clients with? So, it's interesting. I often think that tax time is one of the better times to engage a client in the advisory discussions, because 9 times out of 10 it's when they're expecting to hear from you. So therefore, that they are more responsive, they're expecting to hear from you, they're willing to meet with you. It's not as if it's a call out of the blue. Well, why on earth are you ringing me? Does this mean, is my fee going to go up? So making sure that you have something of value that you can use to start and engage them in those conversations. Now, given that it may be busy in tax time, it may not necessarily do that for all your clients, but you pick out those top ones that you want to get across the line. So, you do have to play to your resources as well, play to your times, but don't let the opportunity go past by saying that it is tax time and not having engaged the discussion with anybody, with any of your clients.
Thanks, Danelle. I've got a question here from Natasha, and the question is, what would be the best way to upskill staff to prepare them for business advisory engagements?
Look, I think business advisory really starts from the outset, and it's challenging your staff as well to make sure that they understand what it is that they're doing. So rather than just simply preparing a GST VAT return or a set of year-end accounts that have got all the work papers beautifully aligned, what does that actually mean? And that's where I started it as a grad, particularly. That's how my career started, with the client, with the partner actually asking me to explain, well, what's happened in the client's business, and if the same thing happened in the year ahead, what would that look like? Were there any areas that we need to be aware of? If the client said that they wanted to do something in particular, they want to grow, they want to buy a building, they want to double revenue, can they afford to? Have they got working capital to do that? So engaging those discussions with your team and getting them to really start to think about the client and what the client would want to do moving forward. Are they in a position to do that? Getting them to start out perhaps with a one-page dashboard. So again, it takes, rather than just reading a balance sheet, which we as accountants can understand, we then have to get really, really clear as to what we want a client to interpret. So, and look, a lot of the teams that are using Spotlight reporting. They have their staff members producing dashboards and their draft reports, and they'll give, in an ideal world, we say you give 45 minutes to prepare a spotlight report, and then 15 minutes or so of partner level insights to add anything extra, anything over and above to that. But that the accountants preparing the outputs absolutely, and putting their initial thoughts on to start to upskill the team. One of our top partners in Australia, actually, they have weekly team meetings, and they do share reports. So at each team meeting, they'll get someone to stand up and share a spotlight report, so they can give context to who the client is and what they were looking for, the report or the dashboard that they presented to them, what worked, what resonated with the client and what didn't. And then by doing that, the team really quite quickly starts to upskill into the services, and get their head around how they can actually start to have these discussions. Whether or not they're actually going to meet with the client is as another issue. You may still continue to do that, or get your senior management team to do that.
Okay, thanks, Danelle. So I suppose, are you saying, and this leads on to another question from Kyle, would you say, if you were first getting into business advisory, not to try and do everything, start small, and so the question from Kyle actually sort of leads on from that is, what should you do if a client wants a service you don't offer?
Well, I mean, if it's something that you're looking to offer, Kyle, then I would have a look and see how you can develop that, certainly. But as I think that, why do you not offer it? Is it not something that if it's not something that you're interested in getting into, then forming a relationship with an accounting firm or an accountant who does offer that service. And look, we do have people where they only do advisory for some clients, and they don't yet have their compliance work. They keep it with another accountant. So if you might be level offering a degree of services, but not others. Form alliances and strategic partnerships so that you can then start to refer back and forth to others within our industry, and within your network that want to perform those services.
Yeah, okay, thanks. Question from Sandra, who asks, she says that the dashboard looks like a great way to start forward-looking discussions. She's asking, how do you then go to the next step? And offer those services, and what are the best tools for delivering them?
So the dashboard is a great way to engage, absolutely. What I think, and Sandra, very correct, you do need to be careful that that you make sure you still add value to the client. So it comes back to making sure you've got those three key cornerstones in place: their business, personal and financial goals for all the stakeholders. Using a dashboard, for example, the one that's on screen now, that's 4 charts. What that needs to be is 4 different discussions that you want to have with the client. So if I use the one that's on the screen now, for example, revenue. We can see what the revenue this year, last year, etc. was, and we can talk about that. But what's the drivers behind that? Are they monitoring the number of leads they have or quotes out, or what's driving their revenue, and what are the forward-looking metrics around that, and do they have a system in place, or do they have that information available to them? And then you can get your hands on that and start to build that into a report. Okay, look, if we want to hit our targets, we know that we need to do 100 sales calls. How are we going to manage that? What happens if we only do 50? What happens if we do 150? And so you can start to build in some of that non-financial information or those drivers around it. So, and that then starts to build out a more robust report. So use a dashboard to introduce. Make sure that the dashboard focuses on areas of conversations that you want to dive deeper into with the client, so that you can then move into more of an engagement. Use the charts. Another really useful thing to do is to use the charts, particularly if clients don't have budgets in place, and say to them, what happens if how, what does the chart look like for the rest of the year if they don't have a budget in place, as a way to illustrate the need to have a budget. And then you can pick up that piece of work and say, right, and now we need to monitor how we're going against that budget on a whatever the cadence that the client will accept. Is it quarterly? Is it 2 monthly? Is it monthly? Not everyone's going to want to meet with you monthly. Not everyone might need to. It might be quarterly that suits. So use the dashboard to engage, make sure you deliver value, and you can then build that out into the next service. It might be, I always urge people to keep it really simple as well. So the first and second dashboards or reports, outputs that you give the clients can be reasonably succinct, and keep them on the financial because that's really efficient to prepare. But then in that third report, put in a non-financial metric. What is their website tracking doing if that's important? What are their Google Analytics telling them? So that again you can continue to surprise and delight, so take something new and fresh to each meeting, so that you can provide that value and provide more, so that then you can keep picking up those engagements.
Thanks, Danelle. For people who want to find out a little bit more about Spotlight, I had a question from Andrew who's saying, like, what's the best webinar or training session? You can either tell us a link now, or maybe we can send that out in the follow-up email.
Yeah, absolutely, because I think, so we do have we have a Super VCFO package, Andrew, so that allows you access to dashboard reporting and forecasting tools, so it bundles it all up for you. So I would say that the best webinar to go to, we do have a webinar coming up on Thursday, and I'll send Matt the link to share with everybody. Our Super VCFO webinar shows you a really high level of all three tools and how you can actually use those outputs as well to then start to engage your clients across the full suite of them. So that would be the best, if you like, learning or educational tool, I feel, to give you a flavour for what you can do.
Fantastic. We've had quite a lot of questions, and I think we've only really got time for one more, but anyone who asks us a question that we don't get to, we will get back to you by email on those ones. So the final question is from Eric, and he wants to know if it's practical to send out a proposal to a potential client and use an example of some of these value-add services. So, for example, like send through a dashboard or a forecast. Is that a good sales tool?
Yes, it can be. Clients need to see the sorts of information that they can get. And so, being able to actually show them a report, show them a dashboard, show them a report and what it would look like is a really great way to engage them. My big comment on that one would be ensure you follow up. You must make sure that you follow up with the client and ensure that they understand what you're sending them. So, a phone call, a half-an-hour meeting, a catch-up in yours or their offices is hugely powerful because it makes sure then that you can understand, well, A, that they've opened it, but B, give it context for them as well, because that's when it gets really powerful.
Fantastic. So we're coming up to the hour, so let's wrap it up there. Thanks very much, Danelle. That was a fantastic presentation, flu or not. So thanks for soldiering on.
I don't mind. Watchers just send me through a list of questions, Matt. I can just answer those, and then we can send out the questions and the answers, as you say, later today or tomorrow, along with the other information.
Fantastic. Well, yeah, thanks, Danelle, and thanks to everyone for coming along today. We'll follow up with that email with the information about Spotlight, the recording, slides, and all of that stuff, either be later today or early tomorrow. So enjoy the rest of your day.
Excellent. Thanks so much for having us, Matt, as part of the month of marketing. Enjoy the rest of the series.
Thanks, Danelle.
Okay, cheers. Thanks. Bye.
Thanks. Bye.